Good evening, everyone. Time for another silver update. This is the 1 hour chart of silver provided by netdania.com. You can see when we put in the trend lines here that we had kind of a spike low. We'll draw the line like that, and then we want to, of course, draw that 35 resistance up here. We had a big spike low on that sell-off. It was significant volume, not as nearly as large as the buying volume here. Now a lot of people criticize, like storm clouds gathering, saying, well, you always talk about when it's selling off, you never talk about when they're buying it. And of course, here's a big spike in buying it. You can see this is nearly 125,000 contracts, spike of that. And 125,000 you're going to have to multiply by 5,000, and you can see here that you're talking about the entire year's worth of world silver supply being traded. What does that mean? That means that a whole bunch of people who are betting on paper going up, and a whole bunch of other people are betting on paper going down. As I pointed out many times, this is a gigantic paper Ponzi scheme. This is just a bunch of people betting one way and others betting another way. What they're betting on is pieces of paper. They're not betting on silver. They're betting on paper silver. And it has nothing to do with the real market in silver. That ultimately is going to be fleshed out with the coin dealers, APMEX, Gainesville, Tulving, Provident, etc., what they can deliver and when the squeeze comes. But if we look at these, this volatility here, we'll draw the trend line in, something like that. You can see the volatility actually took us out of this trend line, then we came right back in. Now, for reasons of comparison, you can look at some of these moves here. You've got a high of about 32.7, a low of about 30, so just call it $2. Now, if you think about $2 in a $30 market, you're talking about roughly a 7 or 8% move. So imagine if you had that on the Dow. The Dow's around 13,000. A 1% move is 130. A 10% move is 1,300. So you can do the math. Imagine if the Dow was fluctuating on a daily basis, down 5 or 6 or 7 or 800, up 1,000. So you can see that the volatility in silver is ridiculous compared to the other markets. There's a reason that it's that way. That's the way they want it to be. That for me is further proof that this is a manipulated market. As Jason Hommel has pointed out many times, there's no fundamental reason when you look at the miners and the way they mine silver and deliver it, and the investors, the people who buy coins, and the manufacturers, the way they consume it. There's no reason that anyone can think of for the type of volatility to exist in the silver market that exists. And of course, the reason why is because it's paper contracts. It's a gigantic derivatives game, and it's played with bankers, fiat, paper, fake money that they use to push the price up. They push the price down. It may be even as extreme as what Bixweir says. It's really just computer rigging operations. One day the game is going to end, and the people with physical silver are going to win, and everyone else is going to lose. So let's go to some questions of the night. These are great questions, so I want to spend the bulk of the night just on these questions and try to go into depth about some of these issues. The first question is from Harble the Cat, and this is about the video Gangnam Style, what a global mania looks like. Hi John, this may sound silly, but I think it illustrates a point very well about how quickly global mania can form what it looks like and what to watch for. In July 2012, a South Korean pop star, I think he's called PSY, released a music video that 6 months later garnered the most YouTube views of any video ever produced. I think it surpassed a Justin Bieber video with close to 850 million views. Commercially, the song in that same amount of time had several million downloads on iTunes, retailing about $1.39 per download, and made headlines by being in the pop music charts in countries across the world. Many silver investors, myself included, believe there will be a day when silver enters into a manic phase characterized by extremely low supply, high demand, and parabolic price increases. My question is, do you believe the manias that we see with silly pop culture that seem to happen on a very regular basis, see Justin Bieber and Rebecca Black, will be good indicator of what silver's manic phase will look like? If millions of people around the world are willing to pay a few dollars to download silly pop songs in a jovial mood, is it not inconceivable that many of those same consumers could buy a 1/10 of an ounce silver bullion coin in a terrified panic? If this happens, do you think content producers such as yourself providing coverage of silver could see an exponential ramp in viewer count? And do you think as silver investors we should be cognizant of this to help gauge the sentiment of the physical silver market? I personally didn't hear about this song or the huge international cultural phenomenon it has been until a few days ago, which I think is a really interesting point, demonstrating how easy it could be to miss the mania. Do you have any other thoughts? Yes, actually I have a number of thoughts on this. First of all, this is out of South Korea. Now, the Gangnam style video, you've probably seen it. It's kind of silly. It's a guy who is riding a horse sort of dance, kind of a catchy, seeming to be electro pop hook that he has in it, and it's obviously gone viral. Now, for me, some of the real salient points about this is that it's out of Asia. I've pointed out for a number of videos that when you see these transitions of cultures, when you see these transitions of empires, you see the easing of the way by the cultural divide being crossed. The video that I covered on the blog for One Tinfoil Hat Sunday was a South Korean Rastafarian artist about chemtrails, and that brings a lot of mocking from the traditional Rasta type music people, Bob Marley fans, etc. But nevertheless, you're seeing the adoption of Western and even Western European musical styles in the Asian culture. And to me, that's just the continuation of the pattern that we've seen in the past. We saw that happen with the British invasion in the 1960s and 70s. Those of you who are rock fans would probably agree with me that 95% of the greatest bands that were around in that time frame were from Britain. There were very few with the creative and popular power that the British invasion had. I don't even need to name the bands. You know who they are. So we're seeing something similar in the East now with Asia. As Asia becomes more westernized, you have to recognize, if you've ever done the night map of the Koreas, if you want to see that, just go to Google and type in South and North Korea night map, and you can see a map of the lights. About the only lights you have in North Korea, I think, is the Emperor's Palace, and then you have the entire area of South Korea being lit up because of the wealth that is being generated over there. Of course, you have Hyundai, and you have Kia, and you have computer chips, and you have all this stuff. Just an economic boom that has been going on in Asia for actually a number of decades. And what you have when you get an economic boom like that is you have the ability to diversify into other occupations. You see more lawyers, you see more accountants, you see more artists, you see more musicians, you see more painters, you see more architects, you see more people who are secondary type of earners who are taking advantage of a lot of the capital that's accumulated in that society. So that's not surprising that we're seeing that. I think we're going to see more and more of that. If you do a search on K-pop, I've covered that before. Some of the girl bands you see there, some of the boy bands you see there, they have production values that exceed what we see in the West. So Asia is on the rise, as I pointed out for many videos. We're talking about 100-year, a century type of boom, one that is just beginning, as Jimmy Rogers has pointed out. It was Britain in the 19th century, it was America in the 20th century, and it will be Asia for the 21st century. So excellent question. And next we have buy nickels. This is from Mars. This is a very important question. If you haven't been following it, there have been a number of stealth stories that you've seen. The original story actually came out from Canada, where Canada announced that they're doing away with their penny and their nickel. And then Timothy Geithner came on board and followed up saying that in January of next year, the penny and the nickel will be phased out. This is huge news. It's being downplayed in the mainstream press, but it's absolutely huge news. Now, I think I've mentioned in a number of videos that I've been buying nickels for the last 2 years. If you go to coinflation.com, you can see the metal value of the nickel. Now, it's come down some. If you go to the LBMA and look at stockpiles, since the financial collapse, we've seen the stockpiles of the base metals increase. But again, inflation is not discouraged by any type of supplier demand, because remember, inflation is caused by printing of money, and even if there's more nickel than we've ever had in the world, the price is still going to go up because the price of those paper dollars that are chasing it are going down. So the nickel is hovering right now at about 5 cents. It's very ironic, in my opinion, that we would begin to be phasing out the nickel where we're in a situation where the nickel is real money. The nickel is a can't lose situation. It's got 5 cents in face value. It also has more than 5 cents, or roughly 5 cents, in intrinsic worth. So the nickel right now is real money. It costs the Treasury about 16 or 17 cents to stamp that out, and then the penny is around 3 or 4 cents. So they're going to do away with those. But as I said, I've been buying nickels for the last couple of years. They're great for doing things like weighing down gun safes, or weighing down things you need to weigh down, sticking them in coin jars and things like that. I think the nickel is probably going to follow on with what happened with the silver coinage in the 1960s. If you remember, it was illegal to melt the silver down when it was legal tender, but then when it was phased out, then it became just another commodity. So stacking nickels is probably a can't lose proposition. You can probably go down to your bank. I've done this a number of times. They look at you like you're insane when you ask for bags or rolls of nickels, a few $100s worth of nickels, and then the tellers will fess up to you that, yeah, we don't have anything to do with these. We can't even get rid of these. No one wants them. They just come in from the vendors or the businesses that trade them in. We just roll them up and stack them here behind the desk. So how many $100s do you need in these? So they're a great investment. They're a can't lose investment. And the pennies, maybe not as much. You have to remember, since 1982, the pennies are primarily zinc with copper coating. Pre-1982 pennies are 90% copper. So you can get a good deal now, because they're going to be phased out, so you don't have to worry about searching rolls of pennies. The penny sorters are obsolete. You just go down and buy rolls and rolls and rolls of pennies, and you're just about guaranteed of making your money back. Now, that is a very important change for the U.S. currency. It's an admission by the powers that be that they have failed to contain inflation, and it's a really big story. I can't say enough about that story, so investigate that on your own, and you probably want to stack some nickels. And the last question is from Slarty Bardfast, and this is, hi Brother John, what will trigger the collapse? I listen to a lot of sources, including you, on a regular basis. Thanks for your hard work. One popular claim is that when interest rates rise, the U.S. government will not be able to pay the interest on the national debt. That will trigger the economic collapse. Is that realistic? It seems the Fed can control the prime rate at will. Another claim is that there will be a big sell-off in U.S. bonds. Well, the Fed has proven they can print and buy as many treasuries as necessary to keep the Ponzi going. Not a likely trigger for the collapse. Another claim I saw on Zero Hedge was that collateral will fail. In 2008, crisis was precipitated by a collapse in the value of collateral, home values behind the majority of debt held by banks in the Western world. Or so the author claimed. He said that the only reason the world economy could be bailed out in 2008 is that sovereign bonds are legally considered 100% safe as collateral. The author claimed that eventually the safe status of all sovereign bonds will be challenged, and that will trigger the global currency collapse. Maybe. What do you think? It just seems to me there are lots of really bad theories out there of what could trigger the currency collapse, and the few good ones aren't that good. Can you share your opinion on this matter? What do you think the likely trigger will be? Well, I don't know what that trigger is going to be, but this brings up a really important point, and that is the interest rates. Now, if we go to the long-term chart of the treasuries, this is a long-term chart from More Research with the free charts, and you can see that we've been running a continuous bull market since about third quarter of 1981. So we're now a good 30 plus years running in this bull market. Now, what most people aren't aware of is the change that occurred at this point in history. Up until the appointment of Paul Volcker, and I've covered this on previous videos, that Paul Volcker was actually appointed by Jimmy Carter, and that he instituted his monetary tightenings before Reagan was elected. So Reagan is always given credit for Volcker, but in fact Volcker was a Carter appointment, and it was Carter's attempt to squelch inflation that actually ended that phase of inflation. But the real important point that most people don't understand is that there wasn't just a raising of interest rates that occurred at this point in time. There was actually a change in Fed policy, and that change in Fed policy was much more important than the appointment of Paul Volcker. The change in Fed policy that occurred in 1980 was that the Fed began to no longer target the money supply. Up until 1980, the Fed was continuously monitoring the U.S. money supply, M1, M2, M3, and regulating inflation by controlling the money supply. When this change occurred, the Fed went from trying to control the money supply to trying to target interest rates. So before 1980, it was not a matter of targeting interest rates. Interest rates were set by the free market. In 1980, the Fed manually targeted interest rates, and that's when we got the spike all the way up to 20%, all the way across the board, long-term, medium-term, and short-term interest rates, nearly 20% across the board. That was the Fed changing policy. Now, we are at the end of that game. We are still in the scenario where the Fed is targeting interest rates. The problem now with quantitative easing is that they are at zero. The short-term rates are at zero, the medium-term rates are near zero, and the long-term rates are approaching zero. So when the power of targeting rates to zero ceases to stimulate the economy, then that is probably going to portend another massive change of policy. Again, this is a 30-plus year period, and we may see a gigantic change in policy again by the Federal Reserve. What that will be, I have no idea, but I do predict that it will be a very dramatic change in policy by the Federal Reserve. Now, the last thing I want to get to is a story that I covered on the blog, and that is actually a sticky that I've done here on the most recent chart of gold and silver. Currently got the Jim Willie article stickied because Jim Willie has so much important information to say about breaking news. But let me go to the chart, and bear with me here while I pull up these stories. We post so many stories in a day, upwards of 50, 60, even 90. And I wanted to, while we're on the topic of the blog, I wanted to thank all the people who have donated Bitcoins. Yes, it does make a difference. You can donate Bitcoins. I wanted to thank all the people who have donated via PayPal. I'll take you over real quick to the Rackspace site, and you can see that we do have quite a bit of traffic, and we do have to pay Rackspace a decent amount of money. You can see we're at 143% of computer cycles for the month. We have about a day left, so we're going to have to pony up quite a bit of money to Rackspace to pay for all the traffic. It doesn't come free. So I definitely appreciate all the people who donate from PayPal and those who donate Bitcoins. Now, if you can't do those, you can always click on the Amazon store. I've got a scrolling Amazon store here. These are mostly items that I purchased. There are other ones that are highly recommended. And if you're going to shop on Amazon for this Christmas, go ahead and click on any of these links or the books at the bottom and go to Amazon, and then you'll be following my link to Amazon, and you'll be supporting the channel. So let's get over to that chart. I think that chart is actually on the 3rd page of the blog, and what that is about is the divergence that we're seeing now between gold and silver. This is a chart that I posted. This divergence, you can see, here's the 28th, and you can see the very violent sell-off that we had. Up until that point, you had silver higher than gold. Or actually, you had gold higher than silver here. Silver is in the black, gold is in the blue, and but they were tracking very, very tightly up until this sell-off point. And then what you had is this tremendous bounce in silver without a significant bounce in gold. You can see that silver has actually outperformed gold since this bottom just a little over a day or so ago. It has actually outperformed gold by a factor of 2. So something is going on in the market. Silver is rallying. We don't know what that is. That could be projected economic growth. That could be projected silver squeeze. There's a lot of things that could be behind that. But right now, silver is outperforming gold, and that is portending a potential breakout from this trend channel. Again, 35 is the price we want to test, and we'll see if we can make it through that, and we'll talk to you next time.